What's up, traders? Anthony Crudele here, and welcome to this week's episode of Develop Your Edge. Just a fantastic show for you today. One of my favorite people and legends in the futures industry, partner at Jim Dalton Trading, Jim Dalton will be joining me to talk about market profile and how he uses it for an edge in his trading. And in my final thoughts today, I'm going to be sharing with you a short setup that I just got into today. We're recording here on Friday. In the Dow. That's right, I'm trading the Dow. So hang tight and we're going to get Jim on the line. All right, traders, we are now joined by Jim Dalton. Jim, welcome to Develop Your Edge. How are things going with you in dealing with COVID-19?
Well, it's actually been very beneficial. I like to do a lot of reading, and this gives me more time to read. I just finished Bob Iger's book, The Ride of a Lifetime, I think it is. Magnificent book.
Yeah, so a lot of downtime, a lot of reading. I've been doing the same thing myself. And thank you so much for joining me today on Develop Your Edge. And we're going to talk a lot about market profile, something that you know quite a bit about. And for those out there that maybe don't know what market profile is, Jim, could you just give us a quick explanation as to what market profile is?
Market profile is nothing more than a statistical tool that allows us to organize the market's continuous two-way auction process. Scientists for years use a distribution curve in order to study data, organize the data. Once the data is organized, it's easier to tease information from it. In order to have a distribution curve, you need a constant and a variable. And the beauty of the profile is time is the constant. Half an hour between 8 and 8:30 is the same as 9 and 9:30. Then you compare price of variable to time, the constant, and it gives you a distribution curve. The profile doesn't tell you to buy, it doesn't tell you to sell, it just allows you to organize data. And with organized data, it's easier to ascertain what's really going on in the market.
Now, for market profile, you specifically use it just for the E-Mini S&P, correct?
No, I've used it for everything. I use it for real estate. I've traded beans, gold, copper. The three principles of any financial transaction, are time, price, and volume. And I don't care what the instrument is. If it's financial in nature, those are important components. So I use it for anything.
So you use it for anything, but in your day-to-day day trading, what market are you using it in?
I use it for the ES.
For the ES and
because
just for your day trading.
Yeah, it's the largest market in the world. I mean, I also use it for my investment account too. It's just a different time frame.
Well, let's talk about that day trading time frame. How do you use market profile to give you an edge in your trading?
Well, I'm not sure. What the market profile does is, I just said, it organizes the data. So the first edge comes from having organized data. The profile allows you to see the structure of the market. If you remember years ago, traders had an advantage on the floor from noise. They could hear what was going on. As volume went up, they knew there was more activity. As volume died down, they knew activity was dying out. Now, with the profile and with, floor trading going away, we get information into our brain through vision. About 60% of the brain is somehow involved in being able to see what is going on. So being able to visually see the market and visually see the structure of the market really is an advantage. And what the structure does, the structure represents the relationship between the different time frames in the market. However, I don't really think that the biggest advantage that I have is the profile. I think the biggest advantage came from the understanding that people are not necessarily rational. And it's amazing so many times traders think they're relying on their intuition. And if I can walk up to almost any trader and pretend I'm watching what they're doing for a few minutes and say, boy, I can see that you have great instincts for trading, and they will grin from ear to ear. Now, the truth of the matter is that our instincts are what do us in so many times in trading. And the examples I use, the first time you ride on the back of a motorcycle, the experienced, operator of the cycle, he's leaning into the curb. You're trying to stand straight up, and which is not the right thing to do. And I remember that first time I went off a ski jump as a kid on water. They explained to me that there was less friction on water and going up a ramp than there was on flat water. Well, I mean, I would have gotten it right on the test. But when I went off that ramp, I'm leaning back. And of course, when I'm up in the air, my feet are pointing straight up. And when I hit the water, I was on my back. It was just another example that our intuition isn't always as reliable as we think. So I think the first thing that really helped me was understanding that our intuition isn't as powerful as we think it is. That doesn't mean we can't work on training our intuition, but intuitively, that's not where we want to start. I think the next thing that was helpful, what does us in so often as traders, is carrying around biases. And that's been very prevalent in this market with this high volatility. So many people don't understand the disconnect that we can have between markets and fundamental reality. You look some years back, the market hit a high and it was 10 years before we got back there. And it appears to me that once again, momentum has carried the market to unrealistic levels. However, unless you understand that the trading is not necessarily related minute by minute to the fundamentals of the market, it can be a very costly experience. I recommend to people that, and I do this in seriousness, stand in front of the mirror each morning, say out loud, I am a short-term trader. My long-term investment biases and likes and dislikes are not relative to what I am doing as a short-term day trader.
A lot of follow-up questions I have for you, Jim. One thing that you said that I could totally relate to is I'm very visual. I like to see things right in front of me as a trader. For the traders out there, everybody can go out and pull up market profile. Explain to them something that you are looking for when you are looking at your market profile.
Well, it's not one single thing. The term that you hear so often is chunking. And chunking sounds like one of those scary psychological terms. The best way to describe it is when you first back a car out of the garage. You get in the car, you open the door, you put the key in, you adjust the mirrors, you adjust the seats, you look back, you go back a couple of feet, and it takes you forever. It's a series of single movements. The more and more you do it, you get the fluidity, and backing the car out of the garage is one single movement. When you learn to observe a market through sight, you're not seeing one thing at a time, you're seeing multiple things, but it's forming one mosaic. For example, I may look at the market, I may see a poor high or a weak high. Those are highs that we think have good chances to be taken out. At the same time, I may see, either strong lows or weak lows. I may see where actually the majority of trade is taking place for any period of time. So it's not seeing one thing, it's seeing a whole picture at one time. That is really a tremendous advantage when you go to trading. So many times people make decisions based on one piece of information, and that one piece of information may be relatively minor when compared to the total picture.
Now, when you're looking at the profile for, let's just say this year, obviously it's been very volatile. Just curious, what are your thoughts on what you're seeing where we are? We're recording here today on Friday, last day of May. So we're kind of concluding May and where we've come from all this time so far this year. What is it something that maybe you're seeing in the profile telling you about where we are right now in the markets?
Well, I say it's not the single profile. What I'm looking at right now, as you remember last Friday, it was kind of a quiet market. Then we had a substantial move up on Sunday night and Monday night, which was, of course, the holiday. That move up was by shorter term momentum traders. There's very little structure underneath that move in the market. And I think that understanding that and understanding that lack of structure has tried to launch additional rallies this week. And almost every rally we've launched this week has failed late in the session. And so much of that has been because the launch is taking place from a very poor structure underneath the market. So it's not a single profile, it's a series of market moves, and you're looking at all of those moves independently. And as you then lump them together, you say that the underlying foundation of the most recent move is not very strong.
That brings me to how you're developing your edge and using market profile as an edge in your trading. You talked about something that you were noticing after obviously years of experience. You saw that happening. And then how did that translate into your trading? When you saw that happening, as you talked about, were you starting to look for areas to be short later in the afternoons?
No, it's really not as simple as that. It all starts off with a mindset more than anything else. And the mindset is that, the market is not static, it's not linear, it's dynamic. And it's dynamic from announcements that came out, it's dynamic because of the people involved in the market. So, one of the things that the profile allows me to do, it allows me to get an idea of the behavior of the different time frames of market participants. What is the very short-term day time frame trader doing? Have they gotten themselves overextended? Is there any longer time frame money that's come in and that's doing something the same as or counter to what those time frames are doing? And that is not something you learn immediately, but it's something you develop over time by looking at organized data. And for example, what I've been seeing here for some time is that there's very little participation by any longer term trading money or investment money. So much of the current participation in the market is what I call by laggard or late entry momentum traders. I'd made this comment from October through the catalyst that was the coronavirus. And the market, I said the market looked terribly weak to me. And when this happens, it usually takes a catalyst to break that behavior. But when it comes, it takes back many days or weeks all at one time. And I think from looking at the individual profiles, we're back into that situation right now. The problem with that is you still have to remember to make a living as a day trader, you still trade each day independently, even though you may feel that the underlying structure is weakening. Like I say, that went on from October through the coronavirus, that the underlying structure was weak. When we took it back with a vengeance. But that is part of understanding the complexity and the dynamics of the market.
Jim, we only have a few moments left, and I just wanted to hear your thoughts as to talking to all the traders out there. How do you really just, I guess, sum it up and put it in words as to how you just use market profile as an edge in your trading?
The edge is that it organizes the market's continuous two-way auction process, and by looking at organized information, it is easier to tease the important information out of the data that we're looking at.
Jim, it's always an honor and a pleasure to speak with you. Thank you so much, my friend, for joining me today on Develop Your Edge.
Thank you.
All right, traders, I'll be right back with my final thoughts.
24/7 access to diverse global markets. Right here.
That's why I added stock index futures to my trading strategy. Now when I see ups and downs coming, I'm ready.
Well played.
Why trade with TradeStation? It's innovative, easy to use, and totally freaking sweet. With powerful tools to track and execute your trades and low per trade commissions on stocks, futures, and options. Upgrade your trade at TradeStation.com.
All right, traders, final thoughts for today. First off, absolutely love Jim Dalton. By far one of my favorite people in the trading industry. He's a legend and my top person when it comes to learning more about market profile. Always learn a lot from Jim and definitely learn some things today. Now, I want to take you to a trade that's setting up for me on my daily chart. And in front of us right now, I pulled up a Dow daily. Yeah, that's right. I'm trading the E-mini Dow on a swing position, not an intraday position, but and I don't normally trade the Dow, but I really love this setup. Now, we've talked about in previous episodes how I like Bollinger Band peaks. I've talked about that in great depth. And when I look at the Dow, now you can see it's a daily chart and it looks kind of chopped up back here where you can't see all the Bollinger Bands. What I did was I only took 2 months back of data because I wanted to really just box off the last 2 months, April and May, and just see what it looked like on the Bollinger Bands. I do that a lot of times where I just take off a certain amount of data to look at what the markets have done. Because let's face it, they've changed a bit from where we were back in March. And I talked about how I like peaks, Bollinger Band peaks, and I don't want to be short when a market's going up and the Bollinger Band peak, the prior peak, is getting taken out by that Bollinger Band. But something that I look for is when we start going up and then all of a sudden we come right back down and take out a low and we start to get back to where that Bollinger Band started to turn up right there, that to me is a sign of watching for a possible reversal. So on the daily, I can't be short. So I have to wait for that Bollinger Band to turn around. So what do? I go to my shorter time frames. And what I do is I go to my 60-minute chart because that's the one I go to look for these positions. And what happened? Now, if you remember in previous shows, I talked about when the Bollinger Bands come in and then we have my beacon levels. If we can't get above that 30% level I talked about, then we could look to start to reverse back down. And I saw that happen. That combined with what I was seeing in the daily, how we took out that low, I said, you know what? It's time to start a swing position in the Dow, actually using the micros for the swing position. So I entered in the Dow short in this area, and I'm going to look to continue to accumulate this position as the daily gets set up. Now, my stop for now is just going to be above these recent highs because at this point, with everything that I see, really a great reaction there. We talk about reactions all the time. Hit that level and boom, came right off of it. Try to go back up there. Every time you could see that they're now starting to sell the rallies in the Dow. So this is really a trade setup that's going to be evolving for me. And you could follow along with this setup. You know, my indicators are free on anthonycrudele.com. So you can go and download them for TradeStation. It's something I'll be watching for and probably tweeting about and maybe even talking about next week on Develop Your Edge. Now, remember, also this week, a huge announcement coming from CME Group. And what is that? Micro E-mini Futures options. So you can go to cmegroup.com, subscribe for updates coming fall of 2020. This is really huge news, I think, for a lot of day traders now that we're getting micro E-mini options. So you can go to CME Group's site and you can subscribe for updates on when the micro E-mini futures are going to be launched. And remember, traders, if you have any questions or comments, please put them down below. And you could also follow me on Twitter at Anthony Crudele. That's a wrap for today, everybody. See you next week.